All right, hey gang, Nate Bear here, lead technical tactician for Monument Traders Alliance and trade of the day. And in this week's video, I want to go over where we are sort of with the indexes, as well as look at a fresh trade setup that I'm looking to get into this week. All right, so the first thing we've been talking about it, we will continue to talk about it, is the market that we're in right now is a pretty strong bull market, right? And it's being led by tech. We all know that. But as the index goes up, hits 3 ATR, a little bit of a pullback, 3 ATR, pullback, 3 ATR, pullback, 3 ATR, pullback, 3 ATR, pullback, right? We're back up at 3 ATR. So what does that mean? Does that mean that I want to go and buy a stock that looks like this? That is also extended, that is also at plus 3 ATR. No, I don't want to buy AMD. The time to buy AMD was right down through here, which is exactly what we did last week. And then we got paid on Thursday and Friday. Do I want to buy a stock like Meta? Right here at plus 3 ATR. No, I don't. The time to buy Meta was last week. Any time in through here when we had this beautiful squeeze, this perfect pattern, right? And we were at the 21 EMA. We took profits in Meta on Friday. Now is not the time to buy extended stocks. The markets are extended, the indexes are extended. So I don't want to buy extended stocks in this moment. What I want to do is I want to wait for the next pullback. And then when everybody else is freaking out and panicking, then I want to say, hey, you know what? This is exactly the same thing that's happened the last 10 times. We're conditioned to be, afraid of the market going down because we think it's the beginning of a bear market. It's not right now, okay? That's not the place we're at. We're not in a spot where sell-offs are being met with hyper selling. Sell-offs are being bought up every time. And eventually that pattern will change and eventually that pattern will shift. But until it does, there's no reason to just not be calm and buy the dip and be patient. Give yourself enough time to let the dip get bought up. Okay. So here's an example of a setup that is not extended. CE, this is a daily chart. And I want to show you guys, this is a new tool that we've developed here at MTA. This is S.A.M. This is my new AI tool. It's a screener that helps me find squeezes on all of these different time frames. And as I've been going through looking for names to talk about this week, I came across CE. It's got an A plus setup on the daily chart. It's got an A plus setup on the 195-minute chart. And I go over here and I check it out. And it's just, for me, it's just perfect. So we've got this beautiful move higher. We've got a woodpecker pattern. If you don't know what the woodpecker pattern is, it's basically a pattern that we've come up with. It's not quite like a bull flag. It's not quite a bull pennant, but it has this unique structure where you have the flagpole, a move back down, and you have this sort of flat top, right, where price gets rejected along this flat top. And then you have this series of higher lows. It does have a little wick right there. That was on earnings. But for the most part, this series of higher lows, and it creates this compression. And then usually what happens is when you break the top of the bill, you go and you take out the top of the head. So a break here would lead to a move up there. My absolute favorite pattern to trade. So what I'm looking to do in this name is I'm looking to just go out. They've got earnings coming up in April. And this one, this is one we could do. I don't really even want to do March. I'd probably go all the way out to June and just go pick up some of like these 150 calls. They're slightly in the money. And yeah, they're a little bit expensive, but that way I don't have to deal with theta. I've got a nice high delta. Instead of buying like 5 contracts of say a $6 option, I can just buy 2 or 3 of a $12 option. For me, that's fine. So what I'd look to do is I'd like to go out to June and pick up the $150 calls, right? Now, where would I want to do that? Where would I want to make that trade? Well, same thing as always. I'd like to come in here and I'd like to start accumulating this position between the 8 and the 21. You can see the point of control here is at about 150. So, I'd like to start getting into this trade around 150. It would need a little bit of a pullback. And then I would use a daily close underneath this 55 EMA that's coming up as my stop. So a stop would be under the 55 EMA. All right. So that's the plan, and then targets. And I'll mark this all up and put it in the notes. But basically, the plan would be to use Fibonacci to define our targets. And they would be up here at 160, basically 164 and 170. All right. So that's what we've got for this week. We've got an A plus setup identified by our AI tool, S.A.M. And I'm looking to get long around 150, stop under the 55 EMA, and targeting a nice move higher to new highs for the move. That's what I've got. I hope it helps, and I'll talk to you guys soon. Have a good one.